Welcome to the explainer. The AI revolution. It's not just some far off idea anymore. It's here and it's literally reshaping everything from cloud computing to enterprise automation. Right now, if you look at the market, everybody is chasing those mega caps. They're piling into Nvidia or Amazon itself, crossing their fingers for steady returns. But honestly, the real life-changing opportunities, those are often hiding in plain sight within undervalued, smaller AI innovators. These are the fast, agile companies that big tech is actively trying to partner with, or even better, just outright buy before their valuations totally explode.
Okay, let's dive into this. Why buy big tech when you can buy who they acquire? Think about it for a second. Amazon has incredibly deep pockets, this massive AWS infrastructure, and a really well-documented history of strategic acquisitions. They don't just build things, they buy them to speed things up. So if you can position yourself right in the crosshairs of their acquisition radar, you can capture that crazy hypergrowth phase that the mega caps have long since passed.
Just look at the contrast here. On one hand, you've got mega caps sitting at trillion-dollar valuations. They are essentially priced for perfection, right? One tiny miss in earnings, and boom, the stock takes a huge hit. But on the flip side, you've got the innovators. These are the 7 relatively cheap AI stocks we're exploring today. They offer serious high growth, incredible asymmetric upside, and they're prime targets for strategic buyouts. They've got actual traction, revenue that's expanding, and, crucially, the exact technologies that Amazon needs to swallow up to dominate the next 10 years.
Here's our ecosystem blueprint for today. We're going to cover 1. The acquisition playbook, 2. Software and voice, 3. The infrastructure backbone, 4. The edge and portfolio, and 5. Risks and reality check. We're taking all this complex data and breaking it down into nice, clear, digestible layers for you.
So, Section 1, the acquisition playbook. Let's see exactly how Amazon goes about expanding its tech empire. Amazon's strategy is honestly pretty brilliant. They pair this massive, heavy internal build-out with very strategic bolt-on investments and acquisitions. Their goal is total dominance using AWS, but they know perfectly well they just can't invent everything in-house fast enough. It's impossible. So what do? They hunt for smaller, highly agile innovators to plug the holes, very much like their massive investment in Anthropic. They basically let the smaller guys move super fast, break things, innovate, and then Amazon steps in to scale that magic globally. Section 2, software and voice innovators. This is the very first layer of our thematic ecosystem, the front-end AI software that we actually interact with every day. And that brings us straight to UiPath and robotic process automation, or RPA. Now, we aren't just talking about your basic clunky software bots anymore. This tech is deeply infused with generative AI for truly smart decision-making and autonomous workflows. So why would Amazon want a piece of this? Well, Amazon is completely obsessed with enterprise efficiency. Just imagine them deeply integrating UiPath's tech and talent to completely supercharge their global warehouse logistics, their AWS customer tools, and all those massive internal operations. It's a perfect match. And this brilliantly illustrates the conviction case for UiPath. 400%. Yeah, analysts are noting that if UiPath executes its AI automation strategy effectively, it could literally see a 400% upside just returning to its previous highs. They're actually on track for profitability in 2026. And get this, even with a really tough macroeconomic environment right now, one discounted cash flow analysis pegs their true intrinsic values somewhere around $17 to $18, which is way, way above where it's been sitting in the low teens. Innovator number 2 is SoundHound AI. Their recent year-over-year revenue growth has been absolutely explosive, hitting nearly 100% in certain periods. And looking ahead to 2026, estimates are pointing to over $230 million. SoundHound specializes in conversational intelligence that goes far beyond just your basic set-a-timer commands. Snapping up their highly specialized voice tech and nimble engineering talent could easily let Amazon fast-track their entire Alexa ecosystem, especially for edge AI and complex multimodal applications, completely bypassing the need to build all of that from scratch. Let's move to and see how this builds into Section 3, the infrastructure backbone. This is the heavy-lifting physical hardware layer. We are talking about the picks and shovels of the AI gold rush. Now, what's really interesting about this is how perfectly these 3 specific companies map on to exactly what Amazon needs. First, you have Marvell technology, providing custom ASICs. That's specialized silicon to help Amazon finally reduce its heavy reliance on Nvidia. Then there's Astera Labs, handling retimers and PCIe connectivity to keep data centers running at absolute blazing speeds. And finally, Micron, supplying the totally critical high bandwidth memory. Amazon is spending billions building out AWS data centers right now, and these three supply the exact physical plumbing needed to make those massive brains actually function. Let's zoom in on Micron for a second. They are essentially the kings of high bandwidth memory. That's the ultra-fast memory that GPUs desperately need just to process all these massive AI workloads. And right now, demand for this is just insatiable. Because of that dynamic, Micron is trading at a really notable discount on their forward price-to-earnings ratio, often just sitting around the low teens. Honestly, it makes them one of the absolute most compelling value and growth combinations you'll find in the entire AI semiconductor space. Then we have Astera Labs. They are experiencing an explosive early-stage ramp-up right now. As these AI models get bigger and bigger, the bandwidth demands inside those data centers are skyrocketing. Astera steps in and provides the crucial connectivity tech that stops bottlenecks dead in their tracks. Because they are a pure-play AI infrastructure enabler, analyst consensus targets are averaging right in the $220 to $240 range, with some highs pushing near $280. That implies a solid 20 to 40% upside. For Amazon, acquiring Astera would instantly secure a massive structural supply chain advantage over all their cloud rivals. Shifting gears a bit, Section 4, the edge and portfolio strategy. This is where the digital AI brain actually meets the physical, real world.
And that brings us to ON Semiconductor. Their core focus areas are things like power management, analog solutions, and robotic sensors. And wouldn't you know it, that aligns perfectly with where Amazon operates in the physical world. Think those massive automated fulfillment centers and incredibly complex delivery networks. ON Semi's tech is absolutely critical for edge AI, which just means AI that's processed right there on the device or the robot instead of up in the cloud. They are a highly underrated play on the physical, tangible side of AI, and they fit Amazon's robotics ambitions like a glove.
To round out the portfolio with our seventh slot, we're looking at the strictly complementary play. If you look at Amazon's M&A history, they show a really strong preference for bolt-on technologies. So this could be a smaller AI software firm or maybe a specialized cybersecurity infrastructure company. The key takeaway here is you want to look for companies whose core tech seamlessly enhances existing platforms like AWS or Amazon's e-commerce intelligence. They provide that rapid speed and fresh innovation that is incredibly hard to foster inside a massive, sprawling corporate bureaucracy.
So the crucial point is, why act now before Amazon actually buys them? Well, it all comes down to this number, 30 to 50%. Historically, when a huge tech giant swoops in to acquire a strategic target, they pay a premium of 30 to 50%, and sometimes even more, over the current stock price. If you position yourself early in these undervalued innovators, you get to capture their organic, day-to-day business growth while simultaneously holding a winning lottery ticket for that massive, instant buyout upside. It's a fascinating dynamic.
But hey, we absolutely need to stay grounded here. Let's look at Section 5, Risks and Reality Check. Just a quick reminder, everything in this explainer is strictly educational, not financial advice. Look, the AI space is thrilling, for sure, but it carries very real ecosystem risks. We're dealing with high-growth tech volatility, meaning these stocks can swing wildly on any given day. You also have to factor in macroeconomic slowdowns, the very real possibility that these smaller companies fail to execute against stiff competition, and of course geopolitical issues that could totally bottleneck the global chip supply chain. There are zero guarantees here, and that is exactly why thoughtful positioning, maintaining wide diversification, and utilizing strategies like dollar-cost averaging are absolutely crucial to safely navigating this space. All right, so we've mapped out the software layers, the hardware backbone, and the very frontier of edge AI. I want to leave you with this final thought and a question. Which layer of the AI ecosystem do you think will see the fastest consolidation by big tech? Is it going to be the infrastructure or the software? I highly encourage you to dive into the research. Think about where the biggest bottlenecks are today and position yourself thoughtfully. Thanks so much for joining me for this explainer, and keep learning out there.